Let me get to Chris Robinson. What are you seeing on the floor at the CME? Because right now with the S&P down 70 points, that's a 3 1/3% clip. It's pretty ugly still.
Yeah, I mean, you saw it last night, and the market reacted. The interesting thing is we were at contract highs before it turned. You know, the contract was at 21.19, and then we broke hard. So we'll see. The bonds are closed now. That's important because now there's no place else to go if you want a safety trade. So there may be a flush here, more to go. But I would concentrate on the percentages. It's only 5%. We've had a 15% trading range this year. And, you know, we may be looking towards that here moving forward. But at some point, I think what he said was correct. Somebody's going to step in here and try and buy this. The bottom fishers will show up. I don't know if they come today or they show up Sunday night.
Yeah, well, Sunday night, let me tell you, is going to be a big night. And we also have to say that right now, though, with 50 minutes left before the closing bell rings, we're still not seeing those buyers, although you could argue that we are seeing utilities move higher. Gold is moving higher. Oil, though, is tanking. Alan, to the NYMEX, what is it that would have clipped 5% off oil beyond, you know, the basic news that, look, yes, they left, but by now, shouldn't we have seen a little bit of moderating with oil?
Well, yeah, you would think there would be a little bit of buy-in in there, but I don't think this is over just yet. I think we still need another pull down, not much more, 45.5 to 46 in WTI, and then we're going to see some buyers enter the market. I think people were positioned long. This was a surprise to them. A lot of people got out of some position. Down we go. But I think we only have a little bit lower to go before we finally rebound. It's going to take 2 years for this to work its way out. This is an overreaction at the moment. The market's getting oversold at the moment. So we only have a little bit further to go down, in my opinion, before we head back up.
Okay, when you say oversold, I think, Paul Christopher, you're in St. Louis, far from this floor, this crazy floor here at the New York Stock Exchange. I'm guessing you're selectively buying, or at least looking at your next picks, because we want to perhaps turn this over on its side and say there are opportunities right now, right? What do you see?
We do agree that there are going to be opportunities, and we especially agree that the U.S. markets, after the shock of this surprise, right, that the U.S. markets will decouple from what's going on and what's going to go on over a couple of years in Great Britain and Europe. We think the economic fundamentals here are improving, and we like the sectors that are leveraged to growth. We like consumer discretionary, infotech, we like industrials, and we recently added healthcare to that list. So that's where we'd be looking. We'd be looking for quality names in those spaces. Going forward, we'd avoid the more highly volatile sectors of the market like small caps and emerging markets. We would prefer the U.S. first and growth in that order.
Why are we seeing technology, Charles, move higher? I mean, look, Facebook, Apple, they all have exposure to the European Union, to the UK. They do a lot of business there, so understandably they're getting hit. But if you look at Apple, it's kind of close to where Warren Buffett came in and scooped up. Then it punched up to about 100.
Apple is more of a China-centric play, I think, than a European.
Well, you'd be surprised. I think a fifth of their revenue comes from the UK.
You know, and Facebook is 24%, which is up there. Cisco's 26%. I mean, listen. The thing I don't think we've talked about is the relationship of the dollar. I think that's what's hurting any of these multinationals. It's not specifically a region per se, but if the dollar gets strong,
which
earnings, and earnings go down. So almost anything dollar-centric is getting hit. And by the way, companies that are domestically, like Clorox, for instance, or Six Flags, or Verizon, those are your safe haven picks today outside of the traditional utilities and things like that.
Chris, you agree with that? It's a dollar issue now?
Oh, yeah. You saw the dollar jump, 3 points right off the bat last night, and that immediately put pressure on everything else that's dollar denominated. You saw a lot of pressure on U.S. commodities today as well. So, and I think that's another reason the crude oil broke so hard. So it was a fight to quality, and we'll see if that extends. But you look at gold. Gold was up $100 at one point. It's come back a little bit, but that was the trade, and I think that guys that got in front of that actually did pretty well.
Gotcha. Listen, Charlie Gasparino, Charles Payne, Chris, thanks to you. Alan, Harry, thank you. Paul Christopher, we appreciate it.